Hello guys, and welcome back into another video. Let's talk about banks and why I am looking to play them. And it's going to be, we have Goldman Sachs XLF, which is going to be our main plays. And overall, again, this video is so that you guys can understand what I'm looking at and you don't have to ask me any questions. And again, it is not financial advice. It is all on you. So let's take a look at Goldman Sachs, which is kind of like my first favorite one. It is a little bit more expensive, but we're taking a look. We have a very nice support. So it was the resistance. Now it is a very, very nice support sitting in for Goldman Sachs. So our stop loss is going to be the close below, which is very, very important that we close below, because we could just like get wicked out, like we did over here. And like over here. So it is very important that if we do close below, that is going to be our stop loss, and that is when it breaks the trend. This is going to be a little bit of an expensive play, and I'll be giving out a very, very cheaper one, okay, on my next play. So let's take a look at Goldman Sachs. We're getting very, very tight symmetrical triangle. We also have a inverse head and shoulder. Okay, we do have a inverse head and shoulder over here. If you guys, see, we have the left shoulder, we have the inverse head, and then we have the inverse right shoulder. It's very, very, very important. And we have the overall symmetrical triangle. Breakout level 394. And our price target, okay, our main price target is kind of going to be this resistance over here coming in, which is 400, a mental number. And I'm taking a look at 2 to 3 week out expiration. And again, this is going to be a little bit more of a pricey play. So if you guys, I have a very, very cheaper play, which is going to be XLF, which is the financial ETF. And basically, this fund kind of holds most of the banks. We're taking a look, okay? First of all, this is going to be a very, very way cheaper play. And we actually have a gap, which is kind of better because, a gap fills, you guys know gap fills, I love gap fills. It's all psychology where we're trying to fill this gap up. So our price target is going to be, 40, again, a mental number. And then I'm looking to enter in right at open, which is going to be very, very important. Stop loss down below, 2 to 3 week out expiration. Now, I might actually move up my stop loss, okay, to above this resistance, because if we do break this resistance at open, we need to hold that. If we don't hold that, it's just not going to look too good. So this play is a very, very cheap one. Okay, this is going to be for sure looking to, alert this. And then Goldman Sachs is going to be a more expensive play. But if you guys have smaller accounts, the risk to reward is not worth it. You always want to enter in less than 10% or even 5% of your account. It really depends upon your risk tolerance. So XLF is going to be the cheaper one. And then last one I wanted to go over kind of here is Bank of America. We have this channel, and overall, banks looking to break that major resistance, which is very, very important. Let's just take a look at like Wells Fargo. Wells Fargo is also actually getting tight. Okay, we also have kind of like a resistance coming in for Wells Fargo, which is, looks all right. XLF is going to be definitely probably like the cheapest play and the nicest play. So we also have, Wells Fargo coming in with a symmetrical triangle. So overall, that is all. Very, very short video. Very, very simple. Hope you guys enjoyed this, and see you guys tomorrow at market open. Again, if you guys do like this content, just leave a like, and see you guys tomorrow at market open.